Hello and welcome to everyone as you enter the session. As usual, this will take a couple of minutes, so I'll just wait out till that seems to stop populating. We've got a couple of minutes to go as well.
Good afternoon. I was going to say good morning.
Hi Lilette, we're live now.
Hi, hello. Hi.
Hi everyone, welcome as you come into the session. We'll just give it a few minutes for everyone to populate in here, and then I'll start the introductions, etc. Hello to you, Raylene, as well. Welcome everybody as you're coming in. I'll just give it another minute or two. Affirmative to that, Cass. Okay, the numbers seem to have steadied now, so we've just hit midday. I'll just kick off with our housekeeping and introductions, etc. So I know a lot of you know us already, but it was some feedback that we received to please introduce ourselves. So my name's Rochelle Park, CEO of AAT, and I'm on the line today with Cassandra Scott and Lilette Khalija, who are both directors of AAT. To kick things off, we'll just do a little bit of housekeeping. Firstly, a reminder that if you've got questions to ask, we're going to ask you to use the Q&A facility, not the chat facility that you see here. The chat facility is more for technical troubleshooting related to the actual webinar itself, like you're having trouble with volume, etc. In terms of the Q&A, we would ask you to use that facility there in the toolbar. And just a reminder that we use that because that helps us capture the questions in a report format that we can review after the webinar session. Whereas the chat facility, we don't have any access to those queries afterward. Now, the other things with the Q&A today, I'm going to ask you to please try and hold out on your questions until towards the end of the session, just to give us a chance to give you the information, and hopefully in that way we might reduce some of the duplicity that we've experienced in previous weeks. We will have a time where we'll try and get to the questions towards the end of the session, and if you feel that your question hasn't been answered, then we're going to get you to send an email to our support inbox, support@aat.org.au. That's support@aat.org.au. And we will attend to those queries in due course. Obviously, some of the queries at the moment, we are needing to get a confirmation from particularly the ATO about those treatments, because there are some unique circumstances coming through. So it may take us a couple of days to get those responses. And we just ask for your patience at this time. So if you can hold out on those questions until we've delivered the information session. So Cassandra and Lilette are going to work with me fairly interactively today. I have put together a few slides today just to make sure we cover off on the really important points that form the foundation of this JobKeeper initiative. Okay, firstly, I just wanted to cover off on the fact that yesterday, the legislative instrument put forward by the Tax Practitioners Board that enabled BAS agents to provide services in relation to some of the COVID-19 specific stimulus legislation was registered yesterday afternoon, meaning that BAS agents are now able to provide advice in relation to those treatments. Obviously, we need to apply reasonable care under all of the same provisions around the Code of Conduct apply. And so we need to be working together to be ensuring that you're applying reasonable care in the application of those new laws. But it's now deemed to be a BAS agent service as well. So I think some of the terminologies for me is important to get right. And I see some confusion around what the actual JobKeeper payment is. And it is a subsidy towards the payment of wages to support employers. So to help them be able to afford the wages throughout this crisis period. The initiative is running for a 13 fortnight period, and they're referred to as JobKeeper fortnights from 1 March to the 21st of September 2020. The April JobKeeper fortnights run from 30 March to 12 April and then 13 to 26 April. Now the payments to be made by the end of the month. So for April only, you can actually pay up to the 30th of April to be included in the April round of JobKeeper payments. Cassandra, do you have anything to add there?
No, that's been covered well, Rochelle. If anything, the pay periods don't need to directly align with the start and finish dates. As long as the pay period falls within each one of those fortnights, it's considered to be eligible. And obviously if the amount of $1,500 is paid in total within those fortnights. So that means that if you've got a weekly pay, you would expect 2 of the pays to fall within each of those fortnights.
Yep. And so it doesn't matter if the employer is paying out leave to reduce leave balances. The subsidy is there to support those leave payments. And as Cass pointed out, it doesn't matter what the pay period is. It just means that a total of $3,000 needs to be paid to those employees within the month of April.
Correct. Has anyone seen the payroll timetable on the ATO fortnight? There's an actual, yeah, that's pretty cool. So that gives you some clarity around the periods. But I wouldn't be going to an effort of changing clients' payroll cycles or anything drastically.
Yeah. So if you've got weekly payers, pay the $750.
Correct.
Yeah. Mm-hmm. And the system is one in, all in, because we've heard quite a bit of commentary out there that some employers want to cherry pick, I guess, which employees this applies to. So any eligible employee needs to be included in this JobKeeper payment process. We've just had some feedback there, Lilette, that your voice was a little bit soft. Maybe it might be to do with your headset. If you can just check that out.
It's probably just my volume. I've got a new computer, so excuse me.
Okay.
Yes. Is that better, people?
I think it's a bit better, yes, Cass. Sorry, Lilette.
Yes. Okay. My volume was down.
Excellent. So I think the next big one is who is incorporated. So we know that it's businesses with employees, but it's also business owners who are self-employed. So they can have employees or not. They will still be eligible for the JobKeeper payment. Not-for-profit organisations registered with the ACNC. And it's also important to have a look at business structures. So we've seen more information come out in relation to this over the past week. So as I mentioned, sole traders with or without employees. Partnerships where those partners are actively engaged within that business. One partner can be eligible to the JobKeeper payment on top of those eligible employees. But if there's multiple partners, they won't be eligible. Only one partner is. Trusts, where one individual beneficiary of a trust who receive only distributions and not a salary or wage, they can be nominated. And again, where there's multiples, it's limited to one. Same with a company director. A company director working in the business can be nominated as well as on top of the eligible employees. But the director, as a director, can get the JobKeeper payment too. We know that there is a turnover threshold. So for where the turnover is less than 1 billion, I think it's interesting to read here that's where the turnover has fallen or will likely fall by 30% or greater, that's in the less than 1 billion category. So for me, there a call out is the will likely. So that means that we're given the discretion to make judgments about what might happen within the business, as long as that's justifiable and we can provide evidence to the Commissioner that that would be the case. Those businesses with turnover in excess of 1 billion, their turnover needs to fall by 50% or greater. And for not-for-profits, that's 15%. So I think it's important to note here that we're applying this turnover test once. So once you've passed that test, you actually don't have to test yourself again for the period of the JobKeeper payment program up until the 27th of September. So this is the topic of quite a bit of conversation at the moment. It's quite clearly stipulates that the turnover fall is based on GST turnover. So when we look at the legislation, GST turnover includes all taxable supplies, GST free supplies, but not input taxed supplies. So I think Cass has made a really interesting point earlier to me this morning. Would you like to contribute there, Cass?
Yeah, we were talking about the recording of transactions through accounting software. So since businesses have started moving to the concept of simpler BAS, where there is less information now being reported on the BAS through to the ATO, there's been a move towards, if it's not GST or a taxable supply, then just recorded as GST free. Whereas those supplies or those transactions may actually be considered either BAS excluded or input taxed supplies. Things like insurance reimbursements, where a client has made a claim on the insurance company and there's been an insurance payout, is probably a good example. It's actually not a taxable supply, it's a BAS excluded supply, but many people may have been recording those as actually GST free, which means at this point, if you're looking at your profit and loss statements or your activity statements, those elements may currently be reporting as GST free and may, because of the GST free status, be deemed to be taxable or turnover for the purposes of GST turnover. So it's an interesting one that we've seen slide since Simple BAS has come in. So it's worth sitting back and thinking about the classification of items that have been recorded as GST free to confirm whether or not they are actually GST free supplies or they're more appropriately BAS excluded or input taxed supplies.
Yep, the risk there being that you're potentially inflating the turnover figure. Okay, so charities may include donations in their turnover calculation on top of those. But important that it excludes GST on sales not connected with the entity, input tax sales, so the Cass is call out there, and the sales that are not connected with Australia. So what is the comparison? And again, we've seen more detail come out on this. GST turnover for March 2020 in comparison to March 2019, or projected GST turnover. So this is where that will likely comes in. The projected GST turnover for April 2020 in comparison to April 2019. Also for the quarter commencing April 2020 to that of 2019. So this isn't dependent upon BAS reporting, which was, I think, one of, it sounded like initially this was about BAS reported BASs, but it's not. It's about GST turnover, which is not the same as what we necessarily report on the BAS, and it's not restricted to the BAS periods, because the wording is will likely, and therefore we can start to look at projections as well. And just to reiterate there that the testing requirement only applies once to remain in the scheme. So I think given, that's a pretty big, this is a self-assessment system, meaning that once you enroll in the system and you provide the information, essentially, unless there are flags called out to the ATO, they're not going to be checking and questioning. So in terms of applying reasonable care, we're suggesting that if you are going to say that we're expecting that the turnover will decline as a projection, then we want to see that mapped out. And I'm going to talk to the team about putting together an Excel spreadsheet where we can help you think through and gather the evidence in relation to why do you estimate a turnover downturn in your projections. So just to really step that out. Anything to add there, Cass or Lilette?
The comment I would add is these are now deemed to be BAS services. So one of the things that needs to be considered is the scope of engagement that you have with your clients around the provision of services. Tax Practitioners Board recommends best practice is that there should be clarity on the scope of engagement. So if you are going to be providing these services to your clients, then I would be qualifying that. So sending them an email saying, hey, we're going to be doing this on your behalf. This is what we're going to be doing on your behalf. Do you agree? Yes, no. And then the second part of that is when we need to, or if the client agrees that we're going to facilitate this on their behalf and make the lodgements or the applications on their behalf through the ATO portals, we should also be receiving an authority to lodge from our clients as well to meet our requirements under the Tax Practitioners Board regarding lodgements, as we do for any other lodgements.
That's an excellent point, Cass.
Agree with Cass. We've done the exact same thing. We've sent out a letter to all our clients. We've also warned them that they'll be getting a new engagement letter should they require us to facilitate all the JobKeeper functions for them. And that also includes something we did similar for STP. We created an online form that gave us authority to lodge and do the declaration on their behalf. So yes, this is definitely something. We've also quoted as well. So we've said to them, this is a one-off fee and this is how much it will cost. Do you give us authority to go ahead? Once you do, we will start immediately.
Okay,
so we've taken this as a additional service, and I know some people out there will do it for nothing, and that's fine. In some cases, we've looked at some clients and gone, well, you know what, their volume has dropped significantly. There's not that much, we can absorb it. So I'm not saying it's a blanket rule across all your clients. You need to look at client by client base, but where the transactions haven't dropped and there is a lot of work to do, don't be afraid to charge for it.
Great, thank you. So I think an important clarification here is we're talking about the GST turnover, which with what I've read and to my mind should be irrelevant of our current reporting mechanism with our BAS statements, i.e. cash or accruals. However, we have this morning submitted some queries to a specialist ATO line just so that we can get absolute affirmation that that is the case. Because as I said before, in the early days, it read as though this turnover change was related to BAS periods and BAS statements. And now very much the language that's coming out is it relates to GST turnover. So we will provide you with clarity around that important information as soon as it comes to hand for us. We'll send it out via email because that's a pretty important piece of this puzzle. Employee eligibility, currently employed by the eligible employer. So including those who have been stood down or have been or will be rehired. As of the 1st of March 2020, they have to be in an employment relationship with the employer. So, you know, coming back to our conversation of a couple of weeks ago, there'll be those clients who are tempted to say, add this person to the payroll retrospectively. That's not appropriate, where you cannot demonstrate the employment relationship prior to that date. It applies to long-term casuals only. Employed on a regular and systemic basis is what the wording says exactly, actually. I have been asked an interesting question where a part-time employee converted to casual prior to the 1st of March, but the employment relationship holistically has lasted longer than 12 months. So given that they're now casual, their casual engagement is less than 12 months. However, to my way of thinking, that employment relationship on a regular and systemic basis, whilst the status has changed, seems to me as though you could prove that that was there and therefore would be applicable. However, I have also put this in writing to the ATO for absolute clarification on that. They must be at least 16 years old and an Australian resident for tax purposes. And so those on temporary visas are not eligible. So important to note there that the JobKeeper payment can only be received from one employer. So we do see very, very commonly, actually, casuals particularly and part-timers working across multiple employers. So this is where it's going to be important for your eligible employers to get statements from their employees that they're not claiming or involved in a JobKeeper payment with any other employer, and we'll see something on that in a moment. So what to do now? Well, you knew that we were registering to get updates. This registration process is not at all enrolling you in the JobKeeper payment. It was simply registering to get updates as and when they came out. So I think we got SMSs yesterday around the fact that there'd been information launched. So anyone who'd registered would get that SMS. It's important to start the work now on checking the client eligibility and their employee eligibility. Pay or continue to pay at least the $1,500 per JobKeeper fortnight. As we've discussed before, that's not necessarily the fortnight. And that has to be for the month of April paid into their bank accounts by the 30th of April to be eligible for the $3,000 per employee for the month of April. You need to notify employees that you're intending to claim the JobKeeper payment. And as I said, check that they're not connected with another employer. Now, as of yesterday, we can see that there's an employee nomination notice. So this form is a PDF or Word document and needs to be completed by both the employer and the employee. This does not get submitted to the ATO. It is retained by the employer to provide evidence that they sought confirmation from their employees that they're not receiving JobKeeper from any other employer. So you can actually start that today. There's the form on the ATO website. This is it here. I'm going to show you how to navigate to this information on the ATO website. It's actually very straightforward. Everything links from the home page, but we'll have a look at that in a minute. So that's an interactive PDF, really quite straightforward. No reason that you can't get that out to your employers today. Now, hearing a lot that obviously cash flow for businesses who've been really heavily impacted by this for many, many weeks now, just simply don't have the cash in the bank to carry over those JobKeeper payments, because the payments won't start to flow out from the ATO until at least the 4th of May, when the declaration forms are available. And I'm talking about the declaration form in a moment. So I think it's probably fair to say we're going to see quite a few people stuck in this rut. What the government is suggesting, the Small Business Ombudsman has put out a notice this morning that the non-bank lenders, there are certain non-bank lenders who've now been nominated to be included in the government's 50% guarantee scheme for loans up to $250,000. What this means is that those non-bank lenders should be able to offer much more reasonable interest rates on non-bank loans, and they're much lower doc, etc. They're used to lending very quickly. So those services include Prosper, Moolah, Get Capital, and On Deck Capital. They are potential ways that your clients can engage with cash prior to the 30th of April. I think the other thing is to talk to their banks as well, because the banks are understanding that basically the employer's only underwriting the JobKeeper payment for a small while. We're hearing that the banks will have more tolerance for, extending credit, keeping in mind they are also a part of that guarantee that the government has announced, significantly reducing the risk profiles that the banks will be carrying. So that's just some thought process there for you. Sorry, just lost my... Okay, so from next Monday, the 20th of April, you can actually enroll with the ATO. So I just reiterate, don't confuse that with registering, which you've probably already done. The enrolment is a totally separate process. The business themselves can enroll via the business portal, but also agents will be able to enroll their clients via the online services for agents portal. And this needs to be completed prior to the end of April to claim JobKeeper payments for the 2 April JobKeeper fortnights. Not to be mistaken with the fact that if an employer experiences a subsequent downturn in latter months, right up until the 27th of September, they are actually going to be able to join in the JobKeeper payment then. This is just in relation to the April payments. So within the enrolment form, there will be pre-filled information that's populated from any information provided by the business's STP reporting. For those who are not STP reporting, there will be the capacity to manually enter and also manually declare the payroll payments. But given at some point all employers are going to have to transition to STP, it's probably a really great time to encourage them to do that. And we know of the low-cost solutions out there to assist with that if they're still in desktop solutions. And as I said, agents will also be able to complete via the online services for agents portal. Okay, so once that process is done, now we did have a meeting with the ATO last night where they showed us the enrolment forms, and they are under embargo, meaning we're not yet at liberty to share what they look like because, as you can imagine, everything's happening very quickly and they still have a bit of legal work to do around those, but they were after some interim feedback in relation to the content of those. So we've done that. Once the application form has been submitted and the process finalised, there is a receipt number provided and you're given a notification that your lodgement has been successful. That essentially is the flag to say that you're good to go for the JobKeeper payments. So where people are concerned that the ATO need to provide a separate approval, remember this is a self-assessment system. As I mentioned before, the ATO definitely indicated they will have flags to try and pick up on those who are doing the incorrect thing and follow up on them separately. But where a genuine assessment has been taken around the employee and employer eligibility and lodged, then once you receive that submitted form notification, then you're good to go. And you can start encouraging your clients to pay their JobKeeper payments to the employees. That being said though, so I'll just point out there that I can't show you that form, but just know that it's coming and it'll certainly be live by Monday for all of us. So you can actually start enrolling your clients as of Monday. But separately to that process, from the 4th of May, you'll actually need to go in and do a declaration. And this declaration will be happening on a monthly basis. And essentially what you'll be declaring on the 4th is that you've paid the money, that all of the eligible employees that you reported are still eligible, the payments been made, etc. So from the 4th of May up to the end of May, you can actually lodge that claim, and that will then precipitate the payment from the ATO out to the employers. As I mentioned, that declaration will happen on a monthly basis through to September. So steps after enrolment, once you've received that confirmation, please confirm with the employees that they have been nominated and they're in the system, it's finalised. So that's the information there about the declaration form that you need to fill out from the 4th of May. And then, yes, there'll be that monthly confirmation. If an eligible employee changes or leaves employment, notification via the monthly JobKeeper declaration is required so that that JobKeeper payment will be removed from your scheme. So I mentioned before that it's pretty easy. This is the it's actually the ATO homepage. And you can see there on the left-hand side, it's very clear where you want to navigate to. So in this case, you'll want to select the second option. This will take you through to the area where you can download that declaration form for employees today if you wanted to start that process. So you can see it's pretty straightforward, nice and clear. You can go down here to the information for employers and employees. If you click on that link there, that will take you through to the PDF for that employee declaration. Okay, so that's where my structured commentary ends. Anything that you'd like to add, Cass or Lilette?
No, I think you've covered it really, really well, Rochelle. We've had a number of questions come through, so would you like me to start stepping through some of the themes on the questions? So we're not going to necessarily answer questions specifically, but rather the general themes that have been coming through.
Thanks, Cass. That would be brilliant. If you just give, because the attendees can't see the question, so if you could just give a brief précis of the question.
Certainly. So one of the earlier ones that came through was around employees that were terminated. The JobKeeper requirement is that an employee needed to have been employed by the business as at the 1st of March 2020. If an employee was terminated, so was employed as at the 1st of March 2020 and was terminated after that date, they can be re-employed, and upon re-employment will become eligible for the JobKeeper supplement or subsidy. So that is something to consider if any of your businesses or clients' businesses have actually terminated employees. They can re-employ them. They may, if they have no work available to them at all, re-employ them and immediately place them on stand down, or they may re-employ them and due to the subsidy coming through may have the opportunity to pay them for worked hours. So yes, if the employee was terminated prior to the 1st of March, then unfortunately this provision doesn't apply because the requirement in legislation is the 1st of March. A second question very similar to that was if a business employed staff after the 1st of March, are they eligible for JobKeeper? Again, the response around that is they were not employed as at the 1st of March, so they will be ineligible for JobKeeper. There's a couple of questions around visas, and specifically a 482 visa. Are they eligible? And no, they're not. I'm not fully across the different visa types that are available and that workers come in. What I would recommend is if you do have an employee who is on a specific visa, run the visa number through Google with the words JobKeeper, and you will get relevant responses that will actually define specifically which visas are supported and which visas aren't supported. A couple of questions around directors. So, you know, in a situation where you've got working directors and they're already on PAYG, assuming the business is an eligible employer and they're deemed eligible employees, they will get the JobKeeper subsidy. But if there are additional directors who are in the business and they're non-working, so they're not on PAYG withholding, one of those directors or one additional director can receive the JobKeeper subsidy as an individual in their own right. So, and that's similar to the provisions for partnerships as well. So if you've got more than 2 partners in a partnership, only one of the partners will be eligible to apply for the JobKeeper subsidy in their own right.
That's just one there on sole traders, and it's a good one. I meant to position that whilst the language on the ATO website as it stands today looks very much about employers and employees, the process will be the same for sole traders, and there is more information to come for sole traders. I know that the Deputy Commissioner working on that was working through the night with his team today in the hopes that perhaps late today or tomorrow there'd be specific commentary. But please rest assured, sole traders are eligible and the application process will be the same as what we've just described for employers.
A number of questions around the application process for sole traders, partnerships, trusts and company directors. We're expecting that to be loaded and available on the website, what's today, Thursday, tomorrow, Friday. So at this stage, the only forms that are available on the website are for employee nomination. Everything else is a watch this space. And as soon as those forms are available, AAT will be putting out a blast advising members of that.
Cass, just to clarify there, the form that's available today is actually the employee declaration to say, I'm only going to claim this JobKeeper from this.
Yes, sorry, my apologies. Yep.
Yep, and then from Monday the 20th, that's when you'll see the enrolment application forms available for everybody, including the directors and the partners and the sole traders and the employers with their employees, etc.
Yes, sorry, yes, that's right. There's been a number of questions around stand down and JobKeeper and things like annual leave and leave accruals and public holidays and superannuation. So I'd like to talk around this a little bit more. And this, going back to the very beginning, we talked about language being important. So the first thing, take JobKeeper out of the discussion completely and look at the status of your employees or your client's employees. Is the employee employed by your business? Yes or no? Really, really simple question. Has the employee been formally stood down? And there are a number of provisions on the Fair Work website that detail how and when employees can be stood down within a business. There are some of those that are specifically related to the COVID circumstance that we are in at the moment, and there were some changes to the Fair Work legislation as part of the legislation changes last week that gave employers more discretion about how they can stand down employees and also about direction around directing employees to take leave. So is your employee stood down? Yes or no? And if your employee is stood down, the question came up about, do you have to issue a new contract? The answer to that is no. You just need to formally advise your employee that they have been stood down, and I believe the Fair Work website has templates on there covering that. If an employee is stood down, they will still continue to accrue annual leave, personal carers leave and long service leave entitlements as if they were employed during their normal hours. So if you've got a full-time employee, their leave accruals will still be based on the 38 hours, assuming they've been stood down for the full 38 hours. If they're a permanent part-time employee, their leave accruals will still occur on their permanent part-time hours. Casual employees can't be stood down. Stand down is only related to permanent and part-time employees. So casual employees are either working or not working. If an employee is stood down, they also should be paid for any public holidays that fall during the period of stand down. So a great example is Good Friday and Easter Monday that we've just had. So if you had a full-time employee and their normal days of work were Monday to Friday, they would be paid for the Monday and Friday public holidays. Now, when you have an employee that is being paid for annual leave or public holidays or working hours, they're considered to be ordinary time earnings, and it's the decision of ordinary time earnings that triggers whether or not superannuation guarantee is payable. So you'll notice here in the conversation that we're having, I've not actually referred to JobKeeper at all. We're talking purely about employees who have been stood down. We're talking about any payments that are being made to employees as a consequence of their stand down or any annual leave that's been taken or any public holidays. To bring JobKeeper into it, each employee, each eligible employee will have paid to the business $1,500 JobKeeper subsidy to be offset against any payments that are already being made to employees. So if you've got a full-time employee or a part-time employee or an employee that's on leave or an employee that's being paid for a public holiday, the JobKeeper subsidy that's being received is going to be offsetting those costs already. Where JobKeeper comes in its own right is in a situation where the payments being made to the employee for either working or annual leave or public holidays are less than the $1,500. So that could be anything between $0 and $1,499.99 basically. If the payment that they're receiving is not $1,500, there is a top up to the $1,500. That top up doesn't attract super because it's not ordinary time earnings, and there is no consideration about any leave accruals based on the top up payment. So leave accruals work based on ordinary hours worked and any annual leave hours or personal carers leave that's taking. Nothing different, nothing's changed in terms of how leave accruals are to be calculated for employees. The JobKeeper top-up payment is the difference between what an employee is ordinarily earning and the cap of $1,500. So I hope that's clarified and answered a number of the questions that have been coming through around, do leave accruals apply on JobKeeper payments? Leave accruals have nothing to do with JobKeeper payments. They have everything to do with the status of the employee within the business. There's also been questions around superannuation on JobKeeper payments. Again, the JobKeeper payment that the employee is receiving, if it's a top-up, is not considered ordinary time earnings. Any other payments that the employee is receiving are ordinary time earnings. Rochelle or Lilette, if you've got any comments around that, and has that cleared things up?
No, it's all straightforward for me. I understand. So
yeah,
I think it's easier when people actually can see it as an example as well. I think an image speaks volumes. I'm hearing you because I understand, but there are many in the audience, it could be overwhelming for them. So I think if you just apply logic to every day, and as you said, I think you were spot on to say exclude JobKeeper out of it, because if you apply logic to normal payroll, you'll understand how it all works.
All JobKeeper is a subsidy towards the wages that you may already be paying your employee. And if those wages don't equal $1,500, then you need to top the employment, the payment up to the employee to the $1,500. It's that simple. Anything that's a top up, no super, no leave, it's just a gratis payment almost to the employees that you're being subsidised for. anything that is not top up that you would normally be paying your employees is subject to all of the existing provisions and requirements around leave accruals and superannuation treatment that were in place prior to COVID-19 joining us in the world.
To wrap that up, Cass, do you want to talk about the PAYG around it as well?
Yes, so there's been a couple of questions about the PAYG treatment. So when processing any payroll for employees, irrespective of whether it's ordinary hours, annual leave, public holidays, or the JobKeeper top-up amount, it will be treated at marginal rates for the employee. So there is no different tax treatment that needs to be applied. Just process it through payroll, and whatever the tax status of the employee is, it will trigger the PAYG withholding that's required.
Okay. I think I've been scrolling through to see that you've answered all the payroll type questions. And I have been going through and answering them. So people are, because no one can see them, as you said.
Well, I can see questions in relation to how the software, like how to enter the transaction, if you want to comment on that, ladies.
Look, I know Cass can probably talk about Xero. I can talk about QuickBooks. I know they've gone through an effort and they've put out a support note. So when you log on to QuickBooks, to KeyPay, you'll see the support notes there. They'll tell you exactly what payroll categories you need to create and how to allocate those JobKeeper payments, and if there are top-ups as well associated, and also how to exclude annual leave and include it for those that have been stood down as well. Because no doubt you'll need to go back and make some adjustments retrospectively to those. We have it in our scenario where we've just said to our clients, look, we're just paying it as normal, and if you are eligible, we'll go back and make some certain adjustments and provisions for it.
So about a week ago, it might have even been slightly less than a week ago, there was a document that started circulating from the ATO that was issued to digital service providers. And digital service providers are essentially the accounting software or the payroll software providers in the space. The document basically stepped through the reporting requirements and how the software was to be set up and coded from an STP perspective. So it was all about the single touch payroll side of things, and what the ATO was wanting to see reported through STP so that they could trigger the payments for JobKeeper. And that was things like a commencement date and an end date for the employee. So when did the employee become eligible for JobKeeper, and when did the employee become ineligible for JobKeeper? Which reporting period, so which fortnight does the payment that's being reported via STP relate to? And also the amounts that are actually being paid to employees. Now, one of those is the requirement to have the JobKeeper payment or the JobKeeper top-up to an employee. So that's where an employee hasn't been earning normally more than $1,500, and it's the difference between what they were earning and the $1,500. The JobKeeper top-up has some specific coding around it. Now, I know from Xero's perspective, they already have information on their website how to set this up manually as an allowance, and they are caveating all of that by saying that they are in the process of developing an allowance code hard-coded to JobKeeper that has all of the relevant STP coding sitting behind it, so that when that is used in a pay run and the pay run is lodged via STP, all of the correct information will go through to the ATO. I'm expecting that all of the cloud payroll providers will be doing exactly the same thing. So the KeyPay, MYOB Cloud, Xero, obviously, and some of the others in the marketplace. I would be more concerned about those payroll services or clients that aren't running payroll or running on a desktop system, where the rollout of any hard coding around STP lodgements may be more problematic in the timeframes that we're talking about. So Xero is definitely got it happening. Anybody that's wanting to start paying their employees the JobKeeper top-up now can set Xero up based on the information that's on their website. And Xero will be advising, once they have put the hard-coded pay items in place, how to run an unscheduled pay run to move it from the interim pay item that's being created to the hard-coded pay item that's being created, so that STP reporting will trigger correctly. So I hope that's qualified that. I did see something on the MYOB website probably about a week ago, again trying to step through the process, and it had some significant flaws in it. I believe it has been withdrawn at this point in time, so I'm not quite sure what MYOB's advice is around it. But I do understand, as one of the digital service providers for single touch payroll, that they're in receipt of exactly the same information as everybody else is. Okay. There's been a number of different questions around turnover and GST registered versus not registered. There's been some questions around GST-free churches. I think that the smart thing with those is, because they're all quite, they're same, different. So they're sort of similar questions with slightly different scenarios, is that we collate those as part of a further discussion around the turnover tests, and incorporate that in feedback out to the AAT membership base. I'm just running through.
I'm just running through and answering some quick simple ones too, Cass.
Question around the list of non-bank lenders. Rochelle will actually send that list out as well and provide that information to the membership base, or might add it into the slide deck prior to sending it out. So one way or other, we'll get that information out to you of the non-bank lenders that have actually been approved.
Okay, so I'll just jump in there and say, we've got up if you go to our homepage, the banner at the top is a direct link to all of our JobKeeper and other stimulus and business support related information. So I'll include everything in there so that it's not confusing. It's a one-stop shop, and we'll make sure that we add those non-bank lenders there too.
Interesting question. Will the client have to pay back subsidies if the projections are incorrect and their actual turnover makes them ineligible? There are provisions in the legislation for overpayments. So if the business is in receipt of JobKeeper Subsidy and is deemed to be ineligible, that will trigger an overpayment status, and therefore, yes, the business would need to repay that. Again, lots of questions about how we should show projected figures. As Rochelle indicated, there'll be a document put together around how to project figures, what information to use.
Questions around annual GST. Clients who...
we'll get that clarified independently, I think, Lilette.
Yeah, there's a few of them.
So there's annual GST, not GST registered, churches where their turnover is GST free, so there's no GST on donations and things like that. We'll collate all of those and answer those quite specifically. Again, re-emphasise, there is actually no need to change any payroll cycles. That will all be worked out through the STP process. So it doesn't matter whether your pay cycle falls on the first day of the payroll cycle or the last day of the payroll cycle, as long as it's reporting $1,500 in each of the payroll fortnights, then that will be fine. And you don't need to pro-rata payments either. If processing wages is normal, do we have to pull out $750 a week to JobKeeper in the payroll if the employee earns more? No, you don't. The only time that you would identify the JobKeeper top up separately is if it was less than the $1,500. It's the delta between what they are receiving as normal wages and $1,500, that gets reported separately. Anything that is above the $750 a week or the $1,500 a fortnight doesn't need to be quarantined or reported independently in any way. By virtue of lodging through STP, the ATO will immediately know that that employee who's been deemed an eligible employee will have been in receipt of more than $1,500, which is the test before tax. Should the clients reduce staff pay just to equal the 15? Okay, so under JobKeeper provisions, and this goes back to the adjustments that were made to Fair Work legislation, an employer has the ability to reduce a client's hours. There are obviously some criteria and provisions around that, and the Fair Work website has some excellent information about under what conditions and circumstances an employer can reduce a staff member's hours. They can't reduce their pay, they can reduce hours. So minimum rates as per employment contracts or rates as per employment contracts are still valid, but hours may be reduced. So yes, it could be a situation where somebody would normally be earning $2,000 based on a 38-hour week, and to get them down to $1,500, their hours may be reduced down to however many hours it's needed to equal $1,500. Will the JobKeeper payments be reported at G1 and T1? The JobKeeper subsidy being received by the business will be considered taxable income. So it will come in as BAS excluded, so it won't be reported at G1, and I'm not 100% sure about T1.
Just got one here from Simon wanting clarification on how timing works if a business is on monthly BAS. Do we compare each month for 30% reduction in turnover but claim it the following month? I won't read the rest of it, but essentially there, Simon, it's not tied necessarily to a BAS period. It did read that way when it first came out, but further clarification has said that we're actually looking at comparing year on year performances. So you can do month or quarter, and you can even project those out. So it doesn't necessarily have to be related to a BAS.
Really great question that has come up is about work cover. And I'll sort of add into that payroll tax as well. Work cover and payroll tax, or workers' compensation and payroll tax, are actually state-based charges that are applied to businesses. They're actually not federal. There's not been any clarification in the Fair Work legislation, and at this point in time, we haven't seen anything come out from the work cover authorities about whether or not the JobKeeper top-up is going to be deemed wages for workers' compensation purposes, and similarly for payroll tax. So they're two questions that are still sitting open, and I know they're being asked of the respective workers' compensation agencies and also the payroll tax agencies in each state. And as soon as we have guidance on that, that will be provided out to the member base as well. How to record JobKeeper money in and out. Okay, so JobKeeper subsidy being paid by the ATO back to business will be recorded as other income. So I would suggest creating a GL code in your chart of accounts, just simply called other COVID JobKeeper subsidy received, or words to that effect. As I said, it will be BAS excluded. It's not GST free, it's BAS excluded. And there is no change that needs to be made on the expense side of things. If you are setting up the JobKeeper allowance code to make the payments in your accounting systems, it just needs to be mapped to your expense, your wages expense code. There's actually no requirement from a business profit and loss reporting perspective to segment it out in any way.
One of the first questions we were asked today was paid parental leave taken in May 2019 and returned in Feb 2020. Would that impact their continuity from a casual worker perspective? I have to say, given the nature of paid parental leave, that I would say that there's no break in the employee-employer relationship there. Would you agree with that, Cass and Alette?
I'd be hesitant to comment on that at this point, I think, Rochelle, because we still don't have absolute clarity about what's deemed to be ongoing and regular employment for a casual. So I would probably seek further guidance on that one.
Yeah, I don't know. That's why I haven't answered it.
Yeah, okay. So on that one, we'll seek further clarification and come back to you.
Yeah. So yes, any JobKeeper top-up will be considered to be gross wages. So it will appear on the employee's STP finalisation, or for those businesses that are still doing payment summaries, it will be reported as gross wages because PAYGW applies to it. So hopefully that's clarified that. Okay, we've had a couple of questions come through that appear to relate more to the cash flow boost rather than to the JobKeeper subsidy. If you've got questions about the cash flow boost, can you please send those via email to support@aat.org.au so that they can be answered individually if that's possible, please. That's the right address, Rochelle, support at?
Yep, it is.
Lovely.
Also, Cass, some of the questions that have coming through about directors and beneficiaries and all those things, I strongly believe that some of these questions reside with the client's tax accountant as BAS agents. We should not be making those decisions. So confer and work with the client's accountant as well, and make sure you get the recommendation from them. So I've had lots of clients who've also been posing lots of different questions, and I'm hesitant to give that advice without the accountant putting it in writing first. So definitely utilise the client's accountant for a lot of this knowledge as well, for the answers on your questions.
Okay. There's been a couple of questions. If a turnover doesn't drop until a later period, so March is looking good, April's looking good, June's looking good, and suddenly it all turns pear-shaped in July, and that's the point at which the employer becomes an eligible employer for JobKeeper subsidy purposes. There is no requirement to deal with back payment. You will only receive the subsidy from the point that you are recognised as an eligible employer. So that would be July moving forward, and there is no obligation for, and no entitlement, in fact, for prior periods. But as Rochelle indicated, once you're deemed an eligible employee, an eligible employer, even if your turnover position does change and does drop below the 30% mark at a later date, there is no retrospectivity there. You're in until the end of the period. So that's good news there. Great question. Can workers be made to come in when receiving JobKeeper payments where work is available after they were stood down? Yes. So a worker has been stood down, and when they were stood down, they would have been advised why they were stood down and for the reasons, the duration of the stand down based on the information that was available at the time. An employer has the ability to make a reasonable direction on an employee saying you are now no longer stood down. So if by virtue of the fact receiving the JobKeeper subsidy allows an employee to make payment to an employee for actual work to be done, there is absolutely nothing that precludes an employer to direct that employee to come back to work. And if you have a look at the Fair Work website and some of the changes that were triggered last week as part of that, there are scenarios around alternate duties. So if you've got an employee who was engaged to do something specifically and you want to bring them back in to do something else, you can actually do that, assuming that all of the health and safety responsibilities are met and that there are no dangers to the employee. So absolutely, workers can be made to come in when receiving JobKeeper payments where work is available after they were stood down. So please refer to the Fair Work website. They have a fabulous page on there that talks about all of the changes that have been made to the legislation as a consequence of the coronavirus stimulus that's now here, and that will answer all of those questions. Fortnightly wages are paid on the Monday after the JobKeeper fortnight period. Does that mean they won't be accepted? They will fall into a JobKeeper fortnight period. So if the payment date is the 30th of March, they will be in the first, irrespective of the period relates to, you know, the last 2 weeks of March. If the payment date is on the 30th of March, they fall into the first JobKeeper payment period. So hopefully that's clarified the question, and then they would be paid fortnightly on the next Monday. That would fall into the second JobKeeper period. Should an employer do anything at this stage if turnover has not dropped yet to the threshold and it's not clear if it will? Do they need to wait until reasonably forecastable or has occurred? Yes, is the answer to that question. You know, if you're not eligible, you're not eligible. And if you don't meet the eligibility criteria, there's nothing you can do. It's simple. If you are able to, as you say, reasonably forecast and it meets the ATO's criteria, then absolutely register. But until you are deemed to be an eligible employer, I would not be making any payments to any employees as part of the JobKeeper subsidy. Is it payroll date or bank paid date? With any payroll transactions, it relates to the date that the employees are paid, not the end date of the payroll period. So you might have a payroll period that runs from the last date of the payroll period is the 29th of March, but payment in the normal cycle of payments doesn't occur until the 30th of March or the 31st of March. It relates to the payment date of the payroll period. So it works on pay date, not work date. Yes, that's correct. JobKeeper top-up, is it an allowance or gross wages? It will be reported as an allowance via STP, but will still form part of the employee's overall wages. So hopefully that's clarified that. Couple of questions. GST turnover relates to GST in and GST out. No, turnover is purely revenue related. It's got nothing to do with the expenses in the business, so there are no expenses that are actually going to be offset when determining GST turnover. Okay. I think we've answered probably as much as we can at the moment, Rochelle. Again, lots of very, very similar themes that are coming through around the questions. A lot of questions around the pay cycles, which we've addressed, I think, on a number of different occasions and will be covered in the slides. Questions about determining the turnover, and as Rochelle's already indicated, we are still waiting on more specific information from the ATO around whether it's accruals, whether it's cash, the different periods. And as soon as that information is clear, we'll pass it out to the membership base. And look, you guys aren't the only ones asking those questions. I'm sitting in a number of forums and a number of environments, and even some of the, you know, the higher level tax experts are asking exactly these same questions. So please don't feel like you're uninformed at this moment, because you're as informed as everybody else is. And as soon as this information is qualified and made available, we will be disseminating it out.
Yeah, okay, Cass, no worries. Look, I know I can see still heaps of questions flowing in here, and we knew that this would be the case. You know, and I guess over the coming days, as you start to analyse your client's circumstances, etc., there will be more that comes through. So we're very, very cognizant of that. I think my first request is that you take the time to read carefully the advice, particularly the ATO information now is very clear and concise in my opinion. So read through on that and try and take it back to its basics, accepting that this JobKeeper payment is a subsidy. And therefore the payroll treatment really happens as per usual. And, you know, you can complicate matters by trying to think of it as anything other than a subsidy. So process the payroll as usual. If the employee earns less, then you're topping it up. And if they earn more, then the employer is getting a bit of a bonus in that the subsidy is given back to them. They just have to pay the amount above. So yeah, we'll end it there. I'll just reiterate that support email address again, support@aat.org.au. And please be patient with that. I do prefer to receive these queries in an email, because if there's anything I'm uncertain of, it gives me the time to go and research that, or indeed seek further advice from the ATO if required. Phone calls, obviously, I often will have to tell you, I'll come back to you. So it's probably just more straightforward to use that support email address, unless you've got a really complicated circumstance we need to talk through. We will run another session next week, time to be advised. I'd really love to get the ATO online with us. I mentioned that last week, they were simply unable to this week because they are so frantic getting everything in place, the information out and the forms organised and things like that. So hopefully next week we'll see how we go with that. So of course we'll advise you when that session is likely to be in due course. You can expect the newsletter, if not this afternoon, tomorrow morning. All of this information is throughout that newsletter as well. And as I said, you can access all of the information on our website. Go to the homepage and click on the banner at the top. It'll take you through. So yeah, I think reading through is really important here to help us get through this volume of questions. And in terms of software specific related advice, I'd encourage you to go to their websites and have a look at their tutorials on how they're recommending that you treat these payments, etc. And I expect you'll be receiving more information from them in coming days as well. So if there's nothing further to add, Cass and Alette?
No, I'm all good. Thanks, Cass. That was informative.
All good. Lots of information out there. Yeah.
Yeah.
Good
Thanks,
marathon there, Cass.
Pardon?
Good marathon there.
Yeah.
I think this has been a 3-week marathon.
Thanks everyone for coming along. I'll just check the chat facility. Okay.
I've got to go, guys. Bye. See you all next week. Have a good week.
Again, bye.
Bye.
Just ending the meeting now.